So, good afternoon, ladies and gentlemen.
Good afternoon.
On behalf of CII Southern Gujarat, it gives me immense pleasure to welcome all the participants to the inaugural session of the CII Virtual IPO Knowledge Series 2026. India's MSME sector continues to be a key driver of economic growth. Economic growth, innovation, employment generation, and exports. As businesses aspire to scale and compete in an increasingly dynamic marketplace, access to growth capital becomes a critical enabler of sustainable expansion. While traditional financing avenues are widely known, opportunities such as SME IPOs and capital market funding remain underutilized by many promising enterprises. Recognizing this need, CII Southern Gujarat is pleased to launch this 5-part knowledge series aimed at helping MSMEs, entrepreneurs, promoters, and business leaders understand the pathway from business growth to capital market readiness. Through this series, participants will gain valuable insights into strategic financial planning, funding options, IPO preparedness, corporate governance, regulatory requirements, and the opportunities that public listing can offer. This IPO knowledge series has been carefully designed as a structured learning journey covering the complete IPO readiness roadmap. So today is session 1. So we will discuss about strategic decision, why IPO. Then session 2 is on the next Tuesday. And session 3 and session 4, session 5, every next Tuesday, we are going to conduct. So next will be on 30th June, then next 7th July, then 14th July, then 21st July. Each session will focus on a critical stage of the IPO journey, like routes and execution. Then next will be business diagnostics. Fourth will be regulatory readiness, and fifth will be life after listing. So each session will focus on a critical stage of the IPO journey, helping businesses become stronger, more scalable, and more ready-to-door organizations. Further, we are pleased to inform all participants that CII Southern Gujarat is planning a physical conference on IPO readiness and growth capital on 28th July 2026, bringing together industry leaders, investors, market experts, and successful listed companies to share practical experiences and growth opportunities through capital markets. We are delighted to partner with Span Consultech, a venture of Span Divergent Limited. Formerly, it was known as Span Diagnostics Limited, one of Surat's early listed companies with rich experience in capital markets and post-listing growth. We are privileged to have with us Mrs. Sujata Desai, Director and COO of Span Divergent Limited and Span Consultech. Mrs. Desai brings extensive experience in business strategy, operational excellence, growth planning, and IPO advisory, helping promoter-led businesses unlock long-term value. We are equally honored to welcome Mr. Paras Desai, Director and CFO, Span Divergent Limited and Span Consultech, with deep expertise in corporate finance, strategic planning, financial restructuring, capital markets, and IPO execution. He has guided numerous businesses through their growth and fundraising journeys. I sincerely thank both our distinguished speakers for partnering with CII and sharing their valuable expertise with the industry. I encourage all participants to actively engage during today's session, reflect on the insights shared, and make the most of this learning opportunity. With these words, I once again welcome you all and wish you a highly insightful and productive session. It is now my pleasure to invite Mrs. Sujata Desai to deliver the context-setting remarks and provide an overview of the IPO Knowledge Series. Mrs. Desai, the virtual floor is now yours.
Thank you so much, Chairman. Hello, my colleagues of CII fraternity. It is a pleasure and privilege for us to bring this webinar series on IPO knowledge. We are from Span Consultech. As such, Mr. Arya has already given our introduction. We are a management consultancy venture of Span Divergent Limited, which is formerly Span Diagnostics Limited, which is one of the early companies of Surat who got listed. And since then, we are following the post-IPO practices. We basically help promoter-led business realize their full worth. We provide services on business diagnostics, strategic consulting, IPO advisory, turnaround advisory, and CXO services. Our services are led by directors who are practicing the systems themselves. As Mr. Arya has already informed that India's MSME sector is a key contributor for the economic growth, employment, exports and innovation. While many MSMEs possess strong products, market potential, entrepreneurial capability, they often face challenges in scaling operations due to a lack of awareness about advanced capital raising avenues. Today, myself and my colleague both are bringing this IPO knowledge series of 5 episodes, which we will be having till 21st July on every Tuesday. And on 28th of July, we are planning a workshop on IPO journey, where we are also having domain experts for providing more insights into this journey. The word IPO is getting discussed in industry circle at a family dinner while reading about competitors or many places. And the word creates excitement and curiosity as well. So for an entrepreneur, the series of questions comes with this word IPO. And through this series, we are trying our best to explain the word IPO and its journey in simple words. With this, I hand over the session to my colleague. Thank you so much.
Thank you, Sujata. I express my thanks to CII for organizing this webinar and giving us an opportunity to be part of this webinar. And I also extend my thanks to respected chairman. Now, before we start this first episode, please allow me to narrate a small story, the memory of which has stayed with me for many years. It so happened that 2 or 3 years back at a business forum, like most probably of the CIA, I happened to meet an entrepreneur. And as it happens over a dinner, the discussion drifted to an informal discussion because I am always curious about an entrepreneur journey, how he has built up his business, what experience he's went through it. And gradually, informal बात करते करते मेरी समझ में आया कि that promoter, that entrepreneur was working almost 12 to 15 hours per day. He was taking extensive traveling. He was handling all the suppliers, vendor development, and he was also a technical person behind the company. So after knowing all these facts, I just asked him a simple question. Sir, आप इतना रिस्पॉन्सिबिलिटी संभालते हो, इतना ट्रैवल करते हो, इतना hours you are putting into this business, it must be really tiring. So after having all this hard work, when do you have your fun time? What is your fun time? Listening to this question, he simply smile and say, my friend, this is the fun time. I enjoy what I do, and that is what I do. The business is my fun time. So I was just a bit taken aback with this reply. I never anticipated this reply. So I just pushed him back. Sir, ये business cannot be a fun time because it comes with lots of problem. आपका कभी जीएसटी का नोटिस आ गया, आपका कभी जीपीसीबी का कंप्लायंस आ गया, आप बैंकर्स आपके सर पे खड़े होते हैं, आपका कस्टम्स में कुछ सामान अटक गया. So there are an infinite number of problems that comes along with the business. So how can you enjoy such a challenging situation? So he further smiled and told me, do you love cricket? I say yes. In India, India में कौन cricket नहीं पसंद करता? Then he asked me, have you ever seen a player getting retired because he faced a bouncer from the bowler? A player leaving the game because he got injured? Or a player leaving the game or retiring because he has lost one of the match? I said no. Same is the fact here. Their players love cricket, so that is why they stick to it, the face challenge, and they try to win. The same is with me. I love my business. This is the game for me, and that is what I enjoy. What may come, whatever challenge may come. So I was really impressed. It was a kind of a wow moment for me. Then I asked him a last question. Okay, sir, you are building this business. You are totally engaged and engrossed in developing this business. So what is your relaxed time? And then he said, my relaxed time is when I visualize my future. My relaxed time is that when I look for my business 3 years down the line, the market I would like to grow, the product I would like to develop. And trust me, I was speechless. This simple sentence reflects the entrepreneurial spirit that is prevailing. And this entrepreneurial skill or the spirit is in giving so much of impetus to our Indian economy. And this entrepreneur spirit is making the city like Surat the symbol of growth, resilience, and lots of opportunity. So this is when an entrepreneur starts his entrepreneurship journey, he sees future which other people fail to see. Then in his journey, business journey, entrepreneurship journey, his opportunities, his dreams expands, they become bigger. And they become so bigger, so larger than the resources available. And at this time, the capital market comes into the picture to give the impetus, to give the fuel to this dream, the opportunity and the vision of an entrepreneur who lives. To complement this capital market comes into the picture. This is time when we talk about IPO. And this is what IPO fuel is a kind of a perceived as a growth enabler. And this is exactly what we are thought of having this IPO web series just to fuel this entrepreneurship spirit and take it forward. So now with this preamble and with this story which I wanted to share with you, and I'm sure this story one way or other way relates to all the entrepreneurs who are being part of this seminar, and that is why they are sitting. So our effort would be to complement in some way to your growth journey, your vision. And with this, I will start my webinar. First episode. I'm just sharing the screen. Is it visible to all?
Yes, sir.
Okay. Thank you. Now this, as Chairman Sir has mentioned already, this is a five-part practical guide to going public. Each episode is an independent in it itself, but all put together, it gives you the very fair and comprehensive idea about an entire IPO journey. Today, our focus would be the strategic decision leading to a choice of IPO, whether to go with IPO or not to go with IPO, and what kind of preparedness that a company should think of. That is going to be the theme of this current episode. The second episode would be route and execution. The third will be the business diagnostics. Fourth will be the regulatory framework and the post-IPO life. So these are the series of episode every week we will be conducting. Now, the question is, why we are discussing IPO? Of course, we have seen, Sujata has already mentioned that every dining table or every meeting, IPO is the buzzword, it is being discussed. But then why it is discussed? If you see, the Indian capital market was once upon considered as a cyclic market. Some spurt come, then there is a downfall. So now Indian capital market has matured. It has become transition from being a cyclic to a very structurally strong. The evidence is in 2025, 1.76 lakhs crore rupees worth of capital was raised. Out of that, 103 was on the form of mainboard IPO and 267 was SME IPO. There are four bigger deals, more than 10,000 crore was there, including LG Electronics and Tata Capital. And if you look, the outlook for 2026, almost 2.5 lakh crore capital is expected to be raised. So, and then if you look at the characteristic of the capital market, almost 24,000 crore rupees of money is being poured in every month in form of SIP. SIP is all the retail investor. The share of foreign institutional investor is reduced to almost less than 50%, and domestic institutional investor is getting stronger and stronger, more and more. So any volatility in terms of global economic situation or dependence on the FII has reduced to the greater extent, and the basic fundamental capital is being available to the capital market. So this is why it is structurally strong. Now, yes, we talk about capital market, how attractive it is, how much money it is getting poured. So the capital has huge capital, but that capital is not just available to anybody. You need to be a deserving candidate in order to be attracting the investors' attention. The capital market is deeper, but it is also demanding. You need to demonstrate your capability, your story, your business plan, where you are going to utilize your money. So this capital market is very demanding. See, there are examples. Some IPOs has been listed very successfully, but in the subsequent month, they are down for almost 70% of the IPO in the main board listed at premium, but 1/3 traded below their issue within the weeks. So these are the reason, because whatever they promised during the IPO, they cannot fulfill. Their poor governance of the way the business is run might got exposed. So investors are always, the capital markets is always being watchful of where their money is being deployed, how the money is being utilized. And so it is a very demanding market. There is no dearth of capital, but at the same time, they are very strict in deciding who they give the capital to. So, as we have seen, the capital market or the IPO is a growth enabler. And there are reasons for that. The number one reason is the capital market or IPO brings a permanent growth capital. In a sense that you don't need to repay. The capital you can deploy in whatever legitimate purpose you have declared and collected for. And not only that, this capital can make the basis for your future capital raise. It creates certain valuation benchmark in the market, it opens opportunity for subsequent FPO, QIP, right issue, preferential issue. So when you go public, go through IPO route and collect the capital, the opportunities are enormous if your business has a strong governance. The second most important benefit that gets unlocked is you get a premium, a credibility premium. An IPO company, a public limited company is perceived much way above a partnership or a private limited company. There are certain B2B business sector or the government contracts where they put immediate credibility and trust if they know that you are a public limited company because they are aware. Being a public limited company, they have to work under the stringent regulation. Even with the customers or lenders, you are seen as respected, professionally managed company. The ones they see that you are a public listed company. The third advantage is you get an acquisition currency. Now, this is a very interesting advantage that gets unlocked. Suppose you are in an expansion path, growth path, you have deployed the capital through IPO. Now you would like to grow inorganically. You have identified certain target company in terms of technical, in terms of marketing, or you see some synergy and you would like to take over, you would like to invest. Now this merging or disintegration of that company could be a cashless. See, when the IPO unlock the value of your share, you can swap your share with the target company's share. So from one share, you get, for example, 10 share of that company and get substantial share into that company. So this is a very interesting route through which you can acquire a target company which complement your business or which help you grow inorganically. Another important thing is that talent. Anybody, particularly at the senior position or the technical position or at R&D level, where the talent is very specific or very scarce into the market, the moment you pose yourself as a public limited company, your chance of attracting them is really, really very good as compared to your other companies who are not public. Not only that, suppose if you are planning to recruit a CEO or CEO or a very C-suite level executive, you have a tool in form of ESOPs, that is the employee shares, which can be offered to them over a period of phase based on certain milestone or based on certain benchmark achievements, and that not only help you attract them but also help you retain them. So this is a talent economics is one of the important benefit that gets unlocked. Another thing is governance. Now, in order to be qualified and remain compliant, you have to upgrade your governance, the way you conduct business. You have to establish lots of systems, lots of practices. You have to institutionalize your entire business way. So this governance upgrade make your company DNA very stronger. It's no more dependent upon a single person decision making. It's kind of a system driven. It is a team driven. And that makes your company sustainable. So these are the kind of benefit which gets unlocked by the public limited company. Now, when we talk about IPO, it should not be thought of or considered in isolation. There has to be a total picture before us before we just jump to a conclusion, okay, let's go for the IPO. I'll tell you the reason. IPO is the capital, and capital is always linked with your capital requirement, which is linked with your growth plan, the business plan, and the vision. Now, if your growth plan in 2 to 3 years horizon is being capable of funded through bank debt, and if you have enough space to have additional debt, probably you may try to consider the debt route. If that is not possible, with your evaluation, because you are not able to service the interest cost because of whatever earning you earn, it goes in servicing the interest. Kind of you are running business for the bank. The repayment put pressure on the principal payment. the covenant pressure, like you need securities and you are run out of all the security in your existing loan. So you don't have additional security to be put to get additional loan. So these are the kind of consideration before you evaluate whether you can go with the debt route or not. If that is ruled out, then another options are, can we go with the private equity or a strategic minority stake? The advantage of going to private equity is that it gives you the benchmark of your company's valuation, because when private equity comes, there is a valuation of the company, there is a due diligence. So it comes at a valuation. So it gives you valuation of the company. It's kind of a first benchmark. Second thing is it allows you to grow. Suppose if you are having total turnover of 100 crore, you want to grow, you have the private equity round, it helps you grow 300 crore. Now, when you go with the 300 crore turnover with the IPO, then there is a chance of P multiple more than what you were at the 100 crore. Even institutional investor will find it more attractive than just to be investing in 100 crore. So this you have to advantage you have to weigh, or it can be used as a complementary strategy before going for the IPO. The same is case with the strategic investment. Now, what do we mean by strategic investment is you get investment by somebody from your own industry. Maybe he has a technology, he has a production capacity, he has a marketing strength, he is one of the supplier of one of the critical material. So you kind of have a synergistic togetherness by offering your 10 to 20% of your equity. The money comes to you, his expertise comes to you, and the business grows. And it comes to a stage when it becomes more attractive for IPO. Same is pre-IPO placement, which generally happens few months back, the IPO, to clean the balance sheet, to retire the debt from the bank loan, or once again to have the valuation benchmark. So all these options should be considered in conjunction with the IPO, and we should create or draw a total big picture before us. And with the combination of this path or that options available, we should take the decision for the IPO, whether we should go it now, whether we should go for the IPO at all, or whether we should go step by step. Now, coming to the next question, suppose if you are actively considering an IPO, then how a promoter should evaluate IPO decision? So there are 4 filters. If you reply to any of your filter is in negative, probably you should rethink and you should pause. The first filter is the very fundamental questions. Why IPO? What is the need for IPO? Now these questions you must correlate with your business plan, your growth plan. The money which you generate, whether you are going to use for the capex, for the market expansion, for capital utilization, for acquisition of another company. So your objective of the resources must be crystal clear. If you think no IPO capital will come, it will help me some general corporate purpose or for some working capital, and we'll figure out. No, this figuring out is not seen very well by investor as well as SEBI. And fundamentally also it is very important that the objective of or the deployment plan of the IPO proceeds is very well defined, very thoughtfully, well in advance. The second question is the timing. Why now? You really need IPO. It is a really good time because your competitors or your peers or your fellow industrymen, promoters has gone IPO. So you also feel, okay, if he has gone, I can also go. Or it is a market excitement. There is a general feeling that the IPO market is buzzing. So let's utilize that. If these are the criteria, probably you should rethink because criteria, just looking at external factor without introspecting or without looking inside, one should not jump to the IPO. Third is why not an alternative? As I explained in my previous slide, there are IPO has to be thought in with the total picture. So have you evaluated threadbare, then all the options available at this stage, and then you feel that no, IPO is the requirement, filtering out all other alternatives, then it is fine. You may go with the IPO. And the most important questions which is overlooked in an excitement to go for IPO is the ready to be as a listed company. One must understand that once a company is listed, it brings with its capital, but along with capital, lots of responsibility, compliances, and you are constantly monitored, you are constantly watched. You have to be compliant to the extent that certain compliance are within 24 hours from the time of occurring of that certain particular events. In the financial has to be in a particular fashion. There has to be lots of control. And more importantly, as a promoter, you should be able to accept being monitored, being questioned, and being compliant, which probably a kind of freedom that you are enjoying. There will be little shift in the kind of environment that you will be going into. So this 4 filter, if all the reply is yes, you are ready for the IPO. Now, what changes when you become a public limited company? Right now, as a private limited company, you are answerable to yourself. But moment you go public, you are answerable to thousands of investors. Probably being as a private limited company, if any decision has to be taken, what you will do, you will call your top management team, have a discussion of 1 hour, maybe 2 hours at the most, and decision is taken. Even sometimes you talk with yourselves and you think that, oh, this is fine, this is my feeling, or this is my wish, and you take the decision. The moment we become, many times, some decisions are taken even on the dining table. Not all the businesses or all the promoters carry the business to the home or to the dining table, but sometimes it happens. All the directors, all the senior management belong to a family, and on the dining table, certain decisions are taken, certain businesses are discussed. But trust me, once you go public, that dining table will get converted into the boardroom table. And boardroom has less food variety and more of the document variety in terms of minutes of meeting, agenda, risk matrix, compliance report, business plan, variance analysis, all sort of. So going public is a kind of a transformation from the way you carry the business, you make the decision, your financials are reported, and everything changes. So one needs to be mindful of this transformation before one decides to go for the public limited IPO. The obligations that comes with being public are real, permanent, and often underestimated. The compliance apparatus, now you will be driven by SEBI, LODR, listing obligation, the rules by the SEBI. The BSC compliance is the timing of reporting every quarterly. So the big gamut of compliances list comes to your tray, and then you have to meticulously follow them, comply them without even a small chance of default, because the consequences are severe. The quarterly microscope, every quarterly the board meeting has to be there. Every quarter there has to be a limited review of all your financials. After the completion of the board meeting, within 2 hours, the report have to be filed to the BSC or the NSC website. The next day it has to be published into the paper. So there is a quarterly microscope, and based on the results are not satisfactory or good or bad, or there will be questions from the investor. That could be a phone call, that could be an inquiries. So you will be under quarterly microscope. Loss of operating privacy, your pay, related party transaction with your sister concerns or with your associate companies, all has to be declared and it will be in a public domain. How much salary you are drawing may be known to your neighbor if he is interested to know. So this transparency kind of is very, very high when you become public. And the market volatility. You are doing absolutely fine. Your results are good. Your performance is good. Your compliances are good. Still, your share may drop to 10%. Thanks to market volatility or external factors. You cannot do anything. You simply watch. So these are the kind of obligations and fact and which are attached with the public life or the life of a public limited company, and those should not be underestimated. Are you an IPO candidate? This is the questions you have to evaluate yourself on 5 dimensions. Your growth trajectory, profitability, visibility, more matters, as well as revenue growth. It's not that you are having a turnover. You should also have your profitability, PAT, EBITDA, because many times the valuations are the multiple of those profitability. The cash generation. Investors love cash, free cash. They don't value much the account receivable lying month after month in your balance sheet. But if you say that your business cycle is generating enough free cash, which is coming to your business, probably they will value your business very high. Revenue quality. If your revenue is coming only from 3 to 4 top clients, almost more than 40 or 50%, you are vulnerable. Your sensitivity to losing a single client is very high, which is not perceived well by the investor. Governance readiness, a functioning board, internal financial control, implementation of Ind-AS accounting standard, quarterly review, budget versus actual and variance analysis, all sorts of internal process, governance process has to be there into the business. And last but not the least, the founder temperament, or the mindset, or the kind of paradigm shift that he has to accept is the willing to operate in a controlled environment, regulated, constantly monitored, lose his freedom, being answerable to the shareholders, and ready to lose the control in terms of equity into the business. So these are the 5 dimensions on which an ideal and IPO candidature must be put to test. And if you pass all 5, you are a good candidate. You are ready. You can move forward in your IPO journey. The boardroom test. Many times it happens in the boardroom. The discussion is like this. We have grown over years. We have reached up to this level. We started maybe with 10 crore of turnover 10 years back. Now we have reached at almost to 200 crore. Now what is our next growth plan? The one group would say IPO. And immediately the second group will say IPO. Oh, but then let's discuss more about IPO and what are the parameters before we jump to the IPO. So there has to be always 2 IPO, and if IPO, what are other factors? And this webinar is specifically for both the group who are considering IPO actively and who would like to understand IPO process before jumping to the IPO. And that one must refrain, or we have to be very mindful of some temptation, because the market is thriving, because the competitors have gone for the IPO, because my colleague has gone for the IPO. No, those are external factors. Those are not your exact situation. Your business situation is different from their business situation. So you should not get carried away by what other people are doing. You should look internally if your business is ready, if your objectives are clear, understand the process, understand the responsibility comes with the IPO, and then you decide on the IPO. IPO is not an event, it's a strategic transition. This is also one of the fundamental understanding before we consider IPO, and there is a misconception. IPO, we went for IPO, we collected the capital, fine, we are successful. No, it's just an event. And the subsequent life has to be thought of, has to be perceived. If I give you an example of a real life, it's like a marriage. The marriage is an event, a very big event. But before it takes place, you have to do a months and months of preparation, minute preparation. And then once marriage gets completed and everybody enjoys that event, then the subsequent life starts. It's a totally different life. It may be good or bad. Depends upon how you take up this marriage life and how you embrace the nuances of the life. The same is with the IPO. Before you go with the for IPO, there will be a huge preparation. On the event, when the bell rings, there will be a huge listing at the premium. There is lots of excitement, lots of money coming into the business. So the marriage is completed. The marriage day is over. But then the subsequent life is what all the governance I just explained you in my previous slide. You have to embrace them. If you embrace them successfully, your transition from mindset to the business practices, then the sky is the limit for your growth, for your expansion. So this is what is the fundamental trait of a public limited company. It is not an event. It is a strategic transition from being one type of company, one type of governance to a different league. Now, I'll just give you a perspective. In IPO, how valuation generally is perceived, or what are the kind of criteria? One of the criteria is price to P to E ratio. That is a benchmark, and that P to E ratio varies from sector to sector. So if you see railway at the bottom, 3.5x, to the e-commerce or the technology company, 377.5x. So it is just sectorial benchmark for the valuation is just kind of a starting point. That doesn't mean that it is a hard fact, it is the given fait accompli that you are into the pharmaceutical sector or you are into the engineering sector, your P2E valuation is only 25x. No, it could be higher, it could be lower. The reason, yes, this is a guiding principle, but your evaluation depends upon your preparedness, your clarity, your USP of your business, your equity story, what growth story or what equity story you are projecting, whether that equity story or growth story is being authenticated by your past performance, and it is supported by the governance machinery that you have put into your business. If in all three you have got the tick mark, probably your valuation will be higher than your sector valuation. If you falter in any of these, your equity story is not good, your growth story is not good, it is not supported by your past performance, probably you will get lower valuation than even your sector benchmark. To give you an example, I will briefly explain you a fourth sector. One is in digital marketplace, where the company which went for IPO, the profit was not there, it was hardly operating at the break even. So the myth is that the profitable company, if it's not profit, probably will not get the valuation, was here checked. The success of that IPO, in spite of having break-even profit, was because it has a market share, it has a network strength in the terms of number of suppliers register on that thing, number of clients or the buyers register on the network, and the repeat purchase rate ratio, that repeating customers, because when client is buyer is repeated on the networking or the e-commerce platform, the advertisement spent is less, because almost if this month 1,000 users have joined, then almost 60 to 70% users are continue to buy on the platform. You don't have to spend extra money to lure them. So these parameters or those USP or this KPI was projected successfully. demonstrated successfully, and in spite of having break-even profit, it listed got premium more than 60% in 3 months. Second is the specialty manufacturer. They demonstrated that their order pipeline is 2 times the revenue, and they are using 90% of their capacity. That means the return on their capital employed in terms of plant is being fully justified. They are having a very good pipeline, and they kept on reporting this on the stock market, and because of that, their stock doubled in a year after listing. The third is FMCG brand. The brand was very much popular. They have got wide distribution network. They have lots of subsidiary and related company before they went public. But then in process of going public, they reorganize their transactions. They very transparently declare their related party transactions, and their rating in terms of P/E multiple got higher, got increased as compared to when they listed on the public market because of the transparency. And the same is the technology-led NBFC. They demonstrated consistently 1%, less than 1% NPA. So the issue is, the moot point is, if you demonstrate your USP of your business, try to find out some IP, some technology, market strength, distribution strength, some performance which catch the attention of the investor. Okay, these are the KPI on which business can thrive, one can trust, and your valuation can soar. So it is very important when you make preparation for IPO, also try to constantly look out for the USP that you can successfully demonstrate to the investor, to the market. So if we go for IPO, it's a long journey. It's not an overnight incident. We can't just say, I have decided for IPO, I have got a clear objective, now let's go for the IPO. Or even if some investor banker comes and say, okay, let's go for IPO, within 3 months I can organize everything and then we should be listed. It is not like that. Readiness is minimum 12 to 24 months transformation journey, and it is not a single transaction, and one should not be in a hurry. One should not jump into the IPO. The first 6 months is a foundation. You diagnose your business. You minutely ask questions on the set parameters. There are the structured model to diagnose the business. Where do you stand with respect to those parameters, those dimensions? So you diagnose the gap honestly, define the quality, equity story, and specific use of the proceeds. This clarity is most important. On month 6 to 15, you build on the governance. You try to bridge the gap which you identified during your diagnosis process. Your systems and management depth developed, and this entire process, getting yourselves internally strong from the governance, from the team, from the HR, from the internal controls, putting finances in place, everything you build based on the findings from the foundation. So that journey goes from between 6 to 15 months, depending upon your preparedness. And last leg, 15 to 24 months, you demonstrate that what you have implemented is really producing results. Your clean index financials, your functioning board, your constitution of the board, your credible tested story, your USP that you identify, you demonstrate that those USPs or those KPI are really generating what they are being claimed. So this foundation, build and prove, this is a 12 to 24 months journey. It is an intense journey, and trust me, it will not only help you get capital from the market, but the real growth, real benefit will come in terms of the strength of your company, your DNA, and that benefit will compound for years to come. Probably your capital will get deployed once, maybe in 1 year, but those benefit in getting ready for the IPO will get compounded for year after year if taken it very seriously. So when we evaluate a business from outside as a professional, or even if you evaluate your business as an insider for with respect to your preparedness for IPO, there are only three stages: either to proceed, or to prepare, or to defer. You proceed if your IPO objectives are clear, if your eligibilities are met, if your internal government system is fine, everything, your KPI story, your everything is perfect. Probably you can go, you can engage investor banker, merchant banker, and within maybe 8 to 9 months, you are ready to be listed. The part two is prepare. Your business plan is good, you have some system, but there still gap exist, which we identify from the first phase of diagnosis. So you need to travel some journey, come to a position where you satisfy yourself, okay, I am 360-degree view of my business I have taken from the point of view of my being IPO readiness, and then you tighten your belt, and it takes some time, and then you go to proceed. And part three is defer. This is the where probably many of the company who has just started thinking about IPO might be falling. The reason the objective are not 100% crystal clear, to the extent the specific identification or quantification of resources, this much resources will go into this area, etc. Governance is informal. Even all the financials and the reports are in the Excel format. There is no proper flow of information. Restructuring is pending. Lots of related party transactions, the informal decision making. So if you fall into this phase three, you have to start this 18 months journey, which I described in my previous slide. So either of these three decisions, proceed, prepare, or defer, 95% of the company might be falling into prepare or defer state, and they have to go for at least 12 to 18 months journey before they really consider going for the listing. So before I conclude this episode, I would like to re-emphasize 4 points. Make the decision only after a structured assessment. Market has enough capital to absorb your IPO, but whether it's reward you or otherwise entirely depends upon your readiness, and only readiness. Readiness that is built dimension by dimension, each and every aspect of business, long before the bankers, merchant bankers, enter your room. So the center point of entire IPO journey, the heart of the IPO journey is readiness, and before readiness assessment, that will tell you whether you can proceed, whether you can prepare, or whether you can defer. Now, the last thing, if you remember my conversation with that entrepreneur who gave me the simile of cricket, the IPO journey is same. It is not like weekend cricket match. It's like walking into the World Cup final. Before going into it, we prepare, we analyze our techniques, we try to identify the gap, and then we prepare ourselves. Same way, when you go to the IPO, you prepare yourself, and when you win the trophy, it will be really worth winning. Thank you very much for your attention, and this is what concludes the first episode of this webinar series. Thank you very much. If you have any questions, we can take it.
Thank you, Paras bhai.
Yeah.
Thank you, Mr. Paras Desai, for an insightful and enriching presentation. Your practical perspectives on business growth, financial preparedness, and IPO readiness have provided valuable guidance for MSMEs and growth-oriented enterprises aspiring to access capital markets. We would also like to thank Mrs. Sujata Desai for setting the context and highlighting the significance of the knowledge series in helping businesses prepare for sustainable growth and future fundraising opportunities. We shall now open the floor for an interactive question and answer session. If there are any questions, participants are invited to share their questions and engage directly with our expert speakers. So is there any question, please?
Yes, I do have a question. I'm Jagdish Singh Sohal and I run a business of project management consulting. It is a service-based industry. So, how impactful it is or how practical it is to have an IPO for a service-based industry, not a product-based?
It's a very, very relevant and very insightful question. As I mentioned in one of my slides, your decision to go to IPO must be evaluated in the background or with the context of the objective of your IPO. Now, if you are in the service industry, so first thing you must ask yourself, how much capital do I need to take forward my business? If you have a capital requirement, if you are a service-oriented company, your major expenditure or major capital goes into the human capital in order to expand your team, in order to whatever kind of business that you are in. So if that volume or that magnitude of capital is required, worthwhile, and if you have a clear plan to deploy them very objectively in your business to take forward your vision or achieve your vision, probably why not? IPO could be one of the route if perfectly matches with the business goal.
Great to know. Great to know,
Okay.
sir. Thank you for the same.
Okay, anybody else, please? Anybody else?
Sir, I think we have one question in chat box from Mr. Venkat Krishnan.
Okay.
The questions I can read is, I'm just confirming it. Can SEBI play a bigger role in deciding IPO premium such that post-listing the valuation doesn't fall big time? Is this the question? So my take would be the SEBI has laid down criteria to be in order to be qualified for mainboard listing, and so far our knowledge goes there is no regulation or any constraint on IPO premium per se. It is the company who decides the premium on the price to see that if they can sustain or if they can support this premium post IPO listing, and that depends on two factors which I already mentioned in my file, in my presentation. One is the performance on the promise. If you have promised something, if you have overachieved it, you will continue to maintain that premium, or if you can surpass that premium. And second thing is there should not be any lapses into the governance. So we haven't, if your governance are good, there are no observations, there are no auditors' qualification remarks, and it does not come to the forefront, probably your premium should be able to be sustained, maintained, or even you can enjoy even the better P2E ratio as compared to your peers.
Okay, one more question is there from Shraddha. She is asking for some highlights on ESOPs. So can you tell us in brief, because we are overshooting the time?
ESOPs are basically options given to an employee, employee stock options, and those there is a vesting mechanism that you vest 5% of your equity, for example, to a particular CEO. Now that vesting is dependent upon the timing that if he stays for 5 years, at the end of the 5th year, he will be out of 5%, he will be vested 1% of the equity. Or it could be on the profitable, that if the company's value market cap goes up to say 2x as compared to right now, 3% of these ESOPs will be vested to him. So there is a very structured mechanism and the vesting mechanism in the ESOP whereby you assign or you give the shareholding to your employee and keep on vesting over a period of time or over a period of performance or combination of both, and then you vest the shareholding to your employee. This is an excellent feature for IPO or public limited company to attract and retain the talent.
Thank you. Thank you, Paras bhai. And thank you to all participants for your active participation and questions, thoughtful questions. On behalf of CII Southern Gujarat, I extend our sincere appreciation to Mrs. Sujata Desai and Mr. Paras Desai for sharing their knowledge, experience, and valuable insights with the industry fraternity. Today's session has provided a strong foundation for understanding why an IPO can be a strategic milestone in a company's growth journey. We hope the discussions have inspired participants to evaluate the opportunities available through capital markets and begin preparing for future growth. As a reminder, our next session, Roots and Execution, is scheduled for Tuesday, 30th June 2026 from 3:30 p.m. to 4:30 p.m., where we will explore SME versus mainboard IPOs, execution processes, timelines, and valuation fundamentals. We also encourage you to mark your calendar for the CII physical conference on IPO readiness and growth capital, proposed on 28th July 2026, which will serve as the culmination of this knowledge series and provide an excellent platform for networking, learning, and interaction with industry leaders, investors, and market experts. We look forward to your continued participation, participants. We look forward to your continued participation throughout this series as we collectively explore the journey from business growth to capital market success. Thank you once again for joining us today. We wish you a pleasant day ahead and look forward to meeting you in the next session. Stay safe, stay connected, and have a wonderful afternoon. Paras bhai,
Thank you.
Sujata ji, thank you very much.
Thank you, Chairman, sir.
Thank you.
And thank you,
Thank you,
CII,
Chairman.
for these wonderful webinars. And I hope that everybody has, it was interesting to everybody. And we will be happy to receive any subsequent questions also you may have. You can just drop us the mail or through CII or directly with us. You can share your questions or queries and we will try our best to reply to your satisfaction. Thank you very much. And see you again next Tuesday.